Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Wednesday, the 5th of March, Bull versus Bear webinar. Steve Miley here on the Call for Trading. Welcome, everyone. We'll go through our usual regular run through in here today. We'll take a look at the macroeconomic data. We'll take a look at the calendars. We'll take a look at the macroeconomics, the geopolitical factors that are impacting financial markets right here, right now. Take a look at some articles from the major news wires, running through what's going on. And we'll also then dip into the charts towards the second part of the webinar. Let's kick off with the calendar, today's calendar. So we've already had in here this morning some of the European, actually Asian and European, but focusing here on the European PMI data from HCOB and S&P Global. So you'll see France, we get on the service sector, we get a beat, we get a slight miss from Germany, we get the Eurozone as a whole, we get a match on the composite, and we get a slight miss on the services PMI. And for the UK, a miss on the services and in line on the composite. So kind of a mixed bag in here overall. You'd have to say overall it's it's just very slightly disappointing, but not a huge amount in it in here. Looking into this afternoon, we get the same out of the US. Kicking off with the S&P Global Services and Composite data at 9:45. Remember, that's the less important data. The more important factors in here coming up with the ISM non-manufacturing PMI data coming out at 10 o'clock. Remember, these are Eastern time. So 9:45 Eastern, S&P Global Composite and Services and Composite, and then ISM non-manufacturing, aka services, at 10 o'clock Eastern. Those are the main two factors we're watching today. Obviously, on top of that, anything again coming out on the geopolitical front regarding the situation of the potential ceasefire in Ukraine, Russia, and then also the ongoing talk around tariffs. Just a reminder while we're on the calendars as well, this is the last week. I've been saying this all week. This is the last week for Fed speakers. So watching out for any Fed speakers last week before they go on their blackout period this Saturday. So we only have today through Friday. Looking back to last night, the main event over the last 24 hours has been Trump's speech to Congress in here. Not the State of the Union speech, but nevertheless a speech to Congress. Went on for some time. The main takeaways in here, ongoing, basically saying that the Americans may be having to face more discomfort ahead, as potentially the measures being put in place could see slow down the economy and could see an uptick in the inflation. But then also in here mentioning that on a message received from President Zelensky of Ukraine, and then talking about potential to sign the natural resources deal, and also then maybe moving on, maybe back on to that peace process, that ceasefire discussions. So a positive there. But I mean, even with Trump even having to admit that could be some discomfort ahead, so that's not great. But it's not something that the market knows. There is potential for inflation. The markets are reacting that way. Potential for inflation. Markets are potential for a recession. And that word recession, there's a little article on that we'll share as we go forward, is being spoken about a little bit more. Not most investment banks, most research houses, not necessarily looking for the US to dip into recession, but certainly looking for a significant slowdown potentially. So that recession word is being used now for the lookout for 2024 into 2020. For 2025 and into 2026. But we're going to also be keeping an eye on. I think there's a call today. So look, Trump warns America of economic discomfort as trade war erupts. Obviously there's tit for tat. I've read, I'm sure in here, maybe it's one of the ones I've got in here, but I think Trump due to speak to Trudeau today. So potentially maybe some mitigating some of the tariffs with Canada. So that's potentially on the agenda. We may get something from that going into today. However, what we did see yesterday was the market rebounded ahead of this anyway. So we had a sell-off and a rebound. The chart looks a little healthier, and then the market actually went up after overnight as well. So markets actually looking a little bit healthier. European stocks jumping higher. This is actually European driven in here. German's DAX up 3%. On German announcement of defence and infrastructure, even spending plans. So defence stocks have been leading the way higher in Europe. European stock indices either at or close to all-time highs. Defence is leading the way higher. Infrastructure spending as well. Had both announcements on a European-wide spending plan, particularly on defence, but also a German spending plan as well. So all of that pointing to a potential. Europe has actually outperformed during this sell-off. Europe's near highs, and obviously we're a long way off the highs for the US stock indices. So over the last couple of weeks in here, as US has sold off around concerns around the geopolitical risks around tariffs and around Ukraine-Russia to a lesser extent, Europe actually benefiting, or European stock indices overall benefiting because of these potential moves into defence spending and infrastructure. So defence sector doing particularly well as Europe starts to increase its budgeting on defence. So European shares rebound as Germany agrees to debt overhaul. Same thing there. And from Reuters, though, the previous one was from Bloomberg. Futures also up overnight in here, being helped by European markets. Also in here, Trump official hints at potential tariff relief. Okay, so that's impacting markets as well going into this morning. That was from Lutnick, okay, Commerce Secretary Lutnick. Trump has imposed tariffs on Canada and Mexico, is considering granting some relief on imports, such as cars and auto parts. So again in here, and that discussion with Trudeau today, we may see an easing back on this. So I do think there's a real risk that the bottom's going in on this sell-off. We've not put that in the technicals in here at the moment. The technicals not actually quite showing that at the moment. However, from a fundamental perspective, I think there's a lot of bad news built in there. A lot of bad news for the economy, a lot of bad news for inflation, a lot of negativity around the Ukraine-Russia situation. That seems to be potentially turning back to more positive. There's a lot of negativity around tariffs, and that could flip back the other way. Obviously, nothing on Europe in here at the moment. That is the one that's kind of waiting in the wings potentially to come through. And China in here, despite the US tariffs in here, China in here are overnight setting a bullish growth goal of around 5%. So particularly upbeat in here. China set a full economic growth at 5% for 2025. That's quite aggressive, particularly with a potential trade war with the US looming. And Asian stocks notably high. So we've had Asian and European stocks doing well overnight, and particularly say European stocks doing far better than their their US counterparts. Whisper it and it's back. This is what I was talking about earlier on this article. Recession risk creeps into market radar. So so that's been on the, I don't think there's anyone calling for a recession. Look, hedge funds turn bearish on equities from Goldman in here. But I don't think any bank I've seen at the moment actually saying a recession, but I'm from the research departments. But what I do see is significant slowdowns, particularly from the US. Europe potentially going to avoid that if we get significant upswings in defense spending. Could actually be like an old-fashioned Keynesian defense spending push to avoid recession out of Europe, as there's potentially large spending from government, maybe running deficits and pushing the defence spending and bolstering that defence sector and infrastructure sectors. So there you see Hang Seng reacting positively, nearly 3% up on the overnights in here to that positive 5% GDP growth prediction from China. Nikkei only slightly better, up 0.25% overnight. European exchanges, the DAX, as we said, doing particularly well. Up the German DAX up 3.33% in here. French CAC nearly 2% up, around 0.5% up for the UK FTSE. And if we turn to the overnights on the futures in here, having had a strong intraday rebound. Remember, we were significantly lower. Strong intraday rebound on the US indices ahead of Trump last night. And then what with the positive news out of Asia, Europe this morning, with those stock indices lifting, and the market overall, the futures market taking the Trump speech as a relative positive, particularly with the Ukraine announcement in here. All of that being seen as positive. So we're up over 0.5% this morning on the S&P and nearly 0.7 up on the Nasdaq. Not much to add in here. I'm highlighting the end of year, the end of year outlook for interest rates. So the market now pricing, if you're looking here, pretty much the peak in here is at 3 cuts now. So the market kind of pricing in potential for 3 cuts. And if we look at only for 2 cuts in here, so this is, we would add these up in here to the right. So the 25 plus nearly 10 and a little bit more. So we've got 36% chance for less than 3 cuts. So you've got then 64% chance of 3 cuts or more by the end of the year. So the market's kind of getting a little bit maybe ahead of itself, but now looking for 3 rate cuts because of concerns about a potential recession. So looking for, and because of the potentials from trade war, looking at more aggressive cuts. Remember, only if we go and take a look, we were looking here at the June, July yesterday. On the historical basis, we weren't even really looking for a rate cut, maybe a rate cut by June, and now we're kind of nailing on a rate cut by June, July. So, and potentially 2 more before the end of the year. It was only about 2 to 3 weeks ago when the markets were on their highs, and we were looking a lot better on the outlook for the tariffs, and before the issues regarding the Ukrainian-Russia peace process, cropped up over the last week. Then we saw the chances of 3 rate cuts, very little chance of 3 rate cuts. In fact, even wasn't only just about looking for 1, maybe 2 rate cuts by the end of the year. So the market far more aggressive on that. And we've spoken about as well, that's also been reflected in the long end with yields going significantly lower in yield. This is the 10-year yield, but that reversed yesterday. Having flirted with this key level in here, which is around 4.13% on the US 10-year, flirted with that level and reversed higher on that. And if we can go back up to slightly, the market, this sell-off has been a bid in bonds. So remember, lower yields equals higher bond prices as a bonds going higher as a safe haven. And if we look at our analysis, although it's not enough in here to actually signal we're saying bullish because of the strong uptrend we've had throughout this year and the acceleration that we had through February to the upside, overall in here, although we're saying bullish, at the moment the risk is that we go slightly down in price, higher in yields, and that's probably good for stocks. Even though we kind of want yields to actually be lower, so that's positive for stocks. The reasons for us going to lower yields is because of concerns around the economy. So this reversal to the downside at the moment is helping stocks. And if we look at the stocks here, we did get that intraday rebound in here. We're staying bearish in here in the reports, okay? However, if we go and look at the charts there, you saw that intraday rebound yesterday, strong intraday rebound, and then it was choppy into through Trump's address yesterday. But then the market's kind of resolved more to the upside. I think we have to clear back above this area here. So this is on the ES. 58.84. It's just above where we spiked up to yesterday, and you had this like consolidation area from previous. So somewhere between 58.77 up to 58.85. I think we need to clear above there for this to actually turn more bullish. So at the moment it's still bearish, but above there would open our upsides, and then critically going to challenge this trend line that comes down from the highs near the end of February. So that's going to be the initial point though, that area there that I've just flagged. If we go and take a look at the equivalent on the NASDAQ in here, you see the market got that rebound. This looks like a little bit of a basing pattern, but again, I think it minimally needs to clear above yesterday's peak. So yesterday's peak then, the spike in after hours activity. It was after hours in here. Let me take a look. Actually, no, it's within hours. So high here is 20,732.5. 20,732.5. If it can get above there, it's also going to be pushing and challenging this down trend line. Again, the trend line coming down from latter February. If it can get above that peak there from yesterday's high, as I say, 20,732.5. Above there would also be flirting with this trend line. If it can reverse above that peak and the trend line, then NASDAQ could lead us back higher in here. So NASDAQ's obviously been under more negative pressure. The Magnificent Seven under significant negative pressure. Tesla's really underperformed. NVIDIA underperforming on this sell-off in here, having outperformed obviously up until then. But now markets, potentially there's a shift back in here to the upside. So I think watching out for that. At the moment, you can't fight the price action. The price action is still bearish, right? Lower lows and lower highs. We're still below this trend line. But any kind of hint above here, we could see kind of value buying coming in. So I wouldn't be surprised to see that happen. And anything kind of slightly positive to trigger that. Remember, we do get the data today, 9:45 and 10 o'clock in here Eastern. The 10 o'clock data more important, the ISM PMI. Probably what we're going to be watching out for any news on tariffs, any kind of leniency being shown on tariffs, any kind of anything coming out of the Canada, the talk with the phone call with Trudeau, and then anything extra that we might get because obviously there seemed to be an olive branch with regard to the Ukraine peace deal. So let's see if we see anything from that as well. But I think anything kind of slightly positive could see. I think as it said in here back in I'm not going to be able to go straight to the article, but basically the article's in here basically saying that hedge funds are now short. The fast money is now short. Okay, short stocks. So we could get an unwind of that short in here, and then the longer term money that's sidelined, we could see that coming in. Buying value. So watching out for that. I think there is real risk that we get a shift back to the upside. Anything I've got on kind of slightly longer, short, intermediate to longer term, I'm looking to be a buyer in here. Okay, I've been sidelined on this sell-off, but then looking to be a buyer. I know that doesn't necessarily help you as a day trader, but I think the way you think about it as a day trader, there is money on the sidelines, and potentially the fast money is short, and the fast money could be getting out. So any kind of break above resistances in here, and say we've flagged those resistances here, the trend lines, and these swing peaks in here on both the NASDAQ and on the ES in here. If we get above those kind of areas that I flagged in the webinar, then I think there's real risk that we get short liquidation squeeze on the upside, real money coming in, and obviously day traders pushing it long, going to the upside as well. So there is real risk of a short squeeze. I'll be watching out for that. But at the moment, the chart stays bearish. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Take care, stay safe, and I'll be back with you. Actually, no, Duncan will be with you tomorrow for Thursday's Bull versus Bear webinar. Take care, stay safe until then. Bye.